Welcome to the Investing Podcast, presented by Tusk Media. Now, for your early morning look at financial news and activity in audio and video form, here's the Morning Market Mimosa.
Good morning, everybody. Welcome to the Investing Podcast, presented by Tusk Media. It's Tuesday, July 19th, 2016. This is your Morning Market Mimosa coming to you live from Struggle City. Hurting over here. I don't know what's going on. Brutal headache. Whole body is sore. I was telling Austin, the intern, I feel hungover, and I didn't even drink last night. It's the worst of both worlds, but you guys are getting to still see this grind. It's the Michael Jordan flu game. Here we are, gritting through it. We're going to put up a performance that you won't believe today. Let's jump in. Let's talk about futures. Futures are basically flat. The Dow is up just a little bit, 1 or 2 basis points. In fact, 10 minutes ago, it was down 1 or 2 basis points, so just kind of hovering in there. S&P down about 23 basis points. NASDAQ down about 1/4%. Oil up a little more than 0.5%, back to 45.48. We're starting to kind of see some normalization around that $45 per barrel mark for oil again. We've seen it as high as 50 not that long ago, as low as the low 30s. Not too long ago either, but 45 kind of seems to be something of a resistance point. It may dip down to 43 or so, but we seem to see it come back up there. So oil hovering right around that $45 range. A couple of companies we do want to talk about briefly, and we mentioned that this week is a huge week for earnings, and we talked about that yesterday. We explained that earnings are kind of like when you get allowance and you buy what you want to buy and you still have money left over. That money left over is your earnings. So I used the illustration yesterday of if you got $10 and you got a pack of candy, a pack of gum, and some kind of toy, you had $2 left, $2 would be your earnings. But it's not quite as simple as that, because at the end of the day, a lot of how that remaining $2 is going to be viewed is based on the expectation. And in the analyst community, the analysts are kind of like your parents. They might not be mad that you only have $2 left, but they might be disappointed. So let's talk a little bit about that. With Johnson & Johnson, strong earnings. They reported stock is looking really strong this morning, up about 2.5% in pre-market trading. They also upped their full year earnings per share guidance. Again, they usually quote earnings in terms of per share earnings, so that you're not an individual stockholder, maybe owning a couple $100 of a stock, or even a couple thousand or 10,000 or even 100,000, and trying to figure out what billions and billions of dollars of earnings actually mean to you. They will divide the total amount of money earned by the number of shares that are out there in the marketplace and come up with a number called EPS, which again is earnings per share. So they upped their full year EPS. They're giving a range of $6.63 and as high as $6.73. Excuse me, Struggle City, don't say I didn't warn you. So that's an improvement of about 10 cents. Previously it was about $6.53 up to $6.68 was the projection. So they upped that guidance, which is good news. The market is excited about that. Analysts are surprised and happy to see that there's $2 left over if you go back to that allowance illustration. On the other side, lots of disappointment coming from the analyst with Netflix. Netflix is down more than 13%. The big story there really is slowed subscriber growth. Now, if you think about Netflix, and another comparable company might be something like Twitter, monthly active users and the numbers of people actually using your service are huge data numbers, sometimes even bigger than earnings, because these are viewed to be growth companies. So what you've seen is Netflix maybe having a growth trajectory like this, straight to the moon, and what you started to see is that growth starting to slow a little bit. Now, it hadn't flatlined like that by any means, but when you combine slowing growth with a higher price coming out to Netflix, if you may recall, I think it was 2 or 3 years ago even, Netflix changed its pricing structure, but when they did that, they grandfathered in everybody that was already there. Even those who were grandfathered in, they're now getting de-grandfathered? I think that's a term. They're now de-grandfathered, and they're now going to start seeing a price bump in their monthly prices for Netflix. So they're starting to see some subscribers actually leave. So that's hurting Netflix again. They're down about 13%. For context, they closed yesterday just north of $98.80 per share. Right now, they're at about $85.87. So really kind of taking it on the chin. That's what we got for this morning. A quick rundown of our schedule. We're going to be back for the stock market power lunch in just a couple hours. I will be here. I'm going to drink some herbal tea. We're really going to rally. It's going to be fantastic. And then at about 2:30, we have the interview with Cody Willard going up. So we are not going to be back for Investing Happy Hour today. We want to give you guys time to listen to my conversation with Cody. If you've missed this dialogue, we kind of baited Cody into coming into this. He talked about Pokemon Go on Market Watch. We felt like he wasn't a big Pokemon Go player, but he came onto the podcast and he talked about his experience with Pokemon Go. He actually compared Pokemon Go to the Beatles, which was a pretty awesome comparison that I really got a kick out of. So he talked about that. He talked about a time where he broke his finger on live television. He told some really awesome stories from his past. Again, this is a guy who was a hedge fund manager. He was a TV anchor for Fox Business News. He's been on Jay Leno's show. He's been all over the place in the investing world and is doing some really cool things right now with Scutify and other projects he's got going on. So it was an awesome conversation. Cody's going to be back, but it's a great introduction to who Cody is, kind of framed within the view of Pokemon Go, more broadly augmented reality, and technology investing in general, because that's really at the core what Cody does is tech investing. So I think you'll really enjoy the conversation. Again, that's going to come up around 2:30 or so. Hit subscribe so you get that. On that episode, Joseph and I, the intern, we sat down and read some 5-star reviews. Big surprise, they're all about Joseph. So you guys leave some 5-star reviews about anybody other than Joseph, and we will definitely read those on the air. If they're about Joseph, we'll probably read those too. But thanks for being here. We'll talk to you guys in a couple hours.
Tusk Media is a subsidiary of Narwhal Capital Management. Ratings and reviews of Tusk Media content are not to be construed as endorsements of opinions, analysis, or services offered by Tusk or its parent company. The opinions and predictions shared here are our professional beliefs at the time of publication. We are not under duress from any of the corporate entities mentioned. This is not a solicitation to take any particular action. Although we are investment advisors, this information should not be considered investment, legal, or tax advice. We strive to be as impartial, insightful, and accurate as possible. We base our opinions, analysis, and calculations on information we believe to be reliable, but we cannot guarantee its accuracy. We can, however, guarantee that our opinions will sometimes be flat out wrong due to a variety of factors. Employees and clients of Narwhal Capital Management may or may not hold positions in the securities detailed and may or may not hold these positions in the future. A full list of all securities purchased, sold, or held during the 12 months preceding the date of this publication can be provided upon request. Unless otherwise noted, all data accessed via MarketWatch or the Bloomberg terminal. Past performance does not guarantee future results. A copy of Narwhal's Form ADV is available at the SEC's website, www.advisorinfo.sec.gov, or from Narwhal upon written request.